The Petroleum Authority of Uganda has reported that oil revenue accounted for approximately 0.5% of the country's GDP in 2020-2021 fiscal year. The contribution is expected to rise to 3 to 5% of the GDP in the next 3 years as additional oil fields become operational. In light of this significant revenue potential, the Insurance Regulatory Authority is urging its licensees to actively participate in the oil and gas industry by offering coverage and settling claims of policyholders. To bolster the growth of local insurance in the oil and gas industry, there is need to work towards reducing high premiums to ensure affordability and enhance investor trust. By addressing these issues, the local insurance sector can thrive in tandem with the expanding oil and gas industry.
Gone on a number of platforms, and I want to ask you a question: if the stakeholders that are involved in the oil and gas actually have the confidence in our consortium, because you find other platforms where we have to push walls to tell them we actually have a consortium and we are willing to take on these risks. So most of them think it is better for them to insure from their indigenous companies other than the Ugandan industry, because I don't know if the confidence is not still there, or we need to do a lot of preaching the gospel to them to understand that we can actually handle some of the.
Again, our insurers actually have the capacity to underwrite those risks. It might not be all the risk, but we have the capacity to underwrite part of that risk, and they've been able to actually underwrite that risk under ICOGU. That is the Insurance Consortium of Oil and Gas in Uganda. They've been able to underwrite various risks, and so far you've been informed about the amount of money that has actually been underwritten in those policies. So yes, we faced those challenges. It was really a mindset change for the international oil companies to also understand that we have the capacity and the capability here. So in terms of the other challenge might have been this is a new industry, and of course you have the teething problems in terms of capacity, human resource capacity, and other types of capacity challenges. But as IRA, that is something that is top of mind, and we are moving very, like I said, the insurance industry is very highly regulated, and that regulation is intentional to ensure that our players have the capacity to underwrite the risks, but also to ensure stability of the insurance industry. So we have actually a regulatory framework on minimum and maximum rates for each of these insurance lines of businesses. And those are available on our website. So it's just a matter of awareness of these regulations, that there are actually minimum rates beyond which our players cannot go. They cannot go below these rates. So the service providers and those that are coming in to get insurance, to interact with the insurance industry must know that there are those minimum rates. So when they come to you and say, this is what we are willing to give, it is actually has been benchmarked against those minimum rates, and they've also, of course, put a margin for themselves as business players. So for us, it's not a worry, because else everywhere.
The local firms in the oil and gas consortium must be aware of significant risks involved, including operator extra expenses, liability, construction, political violence, terrorism, sabotage, delay in startup, operation interruptions, and production risks. An example highlighting the magnitude of these risks is the BP Gulf of Mexico oil spill in 2010, where 134 million gallons of oil spilled into the ocean. The ongoing cost of the spill, which is estimated at $65 billion, is still being paid by the company and is expected to rise further in the future.
Comes to sharing, because there is what they call the hour of need. This is the hour of need. I should say it. I don't want you to defend. I have seen their explanations. When the hour of need comes, he gave very ambiguous statements. When the hour of need came, he jumped out of us. When the hour of opportunity comes, please don't pass your business cards around. If possible, please chase that person out of your pool, because this is the hour of need. We are sitting up, someone is cutting. Then one of us is also joining those people with very funny, ambiguous. I will not be shy on that. We are aware of that person at the hour of need. What I need to assure you is we are going to move. Why? As I've indicated, the project financing is almost 90%. Because if you want 15 billions and you have 13, you're looking for 2. The noise zone is on the 2. And even
Ali Sekatawa, the Director Legal and Corporate Affairs at the Petroleum Authority of Uganda, strongly admonished certain insurance companies that have exhibited malicious and treacherous behavior in their approach towards facilitating the progress of the oil and gas industry. He further stated that the local insurance companies such as MASH, Uganda Limited, in association with MASH Africa Pite, Jubilee, UAP Mutual, and others have been awarded contracts totaling $32 million, and he reassured Ugandans that 90% of the project's financing has been secured, while emphasizing a suitable replacement will be found for the expired oil refinery contract with the Albertine Graben Energy Consortium.
The upstream financing, close to 10 billion, is already secured. ECOP, the equity, is already procured. In terms of the loan, almost concluded, because work for ECOP is already ongoing despite any noise you're hearing. In respect to the refinery, yes, we've had almost 3 years, 4 with the consortium, which expired, whose contract expired. But as noted by government, we are now looking for new financiers for the project. But in terms of the work, the fundamental work of the project, the environmental studies, the feed, and so on, were all completed. So in terms of the confidence, whether the project is moving, yes, it is moving.
Britam, along with other 20 local firms, notified the Oil and Gas Consortium its withdrawal from the financing of the East African crude oil pipeline project, which amounted to $5 billion. However, oil and gas is still positioned as a catalyst of Uganda's development. Data reveals that through national content initiatives, small and medium enterprises have already established connections with around 200 small businesses operating within the ECOP districts. Ronah Nahabwe, SMART24 TV, Business Today.